Welcome everyone to the top chart setup video for today, December 16th, 2020. I'm going to go through some potential setups for some stocks that have been pulling back recently, and then update some that are behaving a little bit better more recently, as well as even some that are heading to the upside that still could be trading opportunities. So first up is TDOC, which has recently pulled back so far in 3 waves, though, into a 618 retracement, which was reached today at the low. And this is following what can count as 5 waves up off of the November low as a leading diagonal, and again 3-wave pullback so far. So this is potentially a 1-2 start to a 5th wave to the upside. Offers pretty good risk reward using a stop underneath that November low, trying to play for the possibility of turning back up from here in that wave 3 of 5. So if you even wanted to try it with a little bit tighter of a stop, not risk as much, slightly higher probability of getting stopped out while still maintaining that setup, but you could even put a stop underneath the low that was made this morning. Moving on to CompuGen, CGEN is the ticker, which posted recently is something that we should keep an eye on. It is starting to look closer and closer to completing this intermediate degree wave 4 and setting up a start to that wave 5 heading to a new high, or at the very least to be wave bounds within that red count as the alternative. So no clear evidence yet that a bottom has been put in place. You might want to approach it where we do wait for a little bit more confirmation if you don't mind taking potentially some initial heat on the position though, and you want to start layering it at this point, just do so with a smaller size and ultimately with a stop that is comfortable for you, but could get one more push down here to that 236 retracement at 1150 and then attempt to turn back up from there. Seems some really nice positive divergence across time frames. This looks like an overlapping ending diagonal, which again might just need a little bit lower in the 5th wave. Moving on to Moderna, MRNA, price continues to cooperate with our preferred path, the wider flat wave 4 in progress, with price currently filling out wave C of 4. So it's time to put this back on our radar again. Pretty close to even actually taking the red alternative off the chart here. I'll go ahead and do that. But there is room to still reach a little bit lower in that wave C of 4. And assuming we get a nice standard 5 waves for that wave C of 4, it looks like we're missing a 4th and 5th. So don't be surprised if price does get a near-term bounce as that wave 4, but ultimately still comes closer to reaching that 382 fib retracement and measured move fib target for wave C, overlapping very nicely right around that same 122 level. So if we do happen to get anywhere close to 122, that would be the spot to start dipping your toe in on the long side again to play for the final 5th wave higher. Moving on to TSON. Previously on my chart, I had 2 options, a 1-2 and price starting a 3rd wave to the upside further along in wave C, with the alternative that this was a larger wave 1 and 2 of what would be an ending diagonal for the C wave. So with price recently turning back down here, it seems like that 3-wave move to the upside as wave 1 of a larger ending diagonal C wave was the correct interpretation. And that still gives us an opportunity to attempt another entry for those of you who missed the entry at the beginning of November. So price is starting to approach a standard 382 to 618 retracement between 64.32 and 61.93. Anywhere within that range is attractive as far as attempting that long entry and set a stop either underneath the 786 or if you want to give it up to a full invalidation below the November low. Moving on to NVAX, which was another recent wave setup or recommendation. Right now, price is holding above the recent low that was made in December still. That's on December 9th. That was where about we initially had suggested that right here. And you can count a possible 5 waves up off of that low. 1, 2, 3, 4, and 5. And so far, an ABC 3-wave pullback. It did take price down, I think, a little bit below 6.8, closer to 7.64. So if this is any sort of micro 1-2 start, whether that be to a third wave or whether that be to this wave 5 of 1, holding above today's low and turning up from here would be ideal. So another situation, I mean, if you want a really tight stop, you could even put it below today's low. Hopefully we get another micro 4-5 here, so we get a micro 5 waves up off of today's low, and that'll signal prices ready again to continue further to the upside. The alternative, if we do take out today's low, and obviously especially below the low that was made on December 9th, is that price is still working on a wider flat correction as the red wave 2, that can take us down closer to 99. So it really depends on, what your intention for the trade is. If you're aiming for that large degree potential and filling out the rest of the 5th wave that is possibly starting off of the November low, you may want to just use another leg down to 99 as an opportunity to add to that position and maintain your stop underneath the November low. If you're trying to just play for the shorter term potential of a micro 1-2 off of the December 9th low, then you can set a stop, again, either very tight underneath today's low, or give it a little bit more room underneath that December 9th low. Moving on to SPCL, which saw a pretty significant spike initially lower today, but pretty quickly recovered back up off of that low that was made this morning, which slightly exceeded a 50% retracement, basically came down, tested the 200-day moving average, and again, rebounded very strongly off of that support. So that actually argues and seems to fit pretty well as a possible 1-2 start to a larger leading diagonal off of the November low. Another situation where if you wanted to make an entry tomorrow and set a stop underneath that low that was made today, that gives you pretty good risk reward, and could even use up to full invalidation below the November low if you want to give it more room. Moving on to GOGO, which I've been talking about and highlighting recently. It did kind of give us this more recent pullback, which obviously invalidated price already being in wave 3 of 5. But it opens the door to a different interpretation where we have a leading diagonal up for the wave 1 rather than the larger 5th itself being an ending diagonal, and this being a corrective ABC flat, which has come down to the 618 retracement. So it still offers good risk reward here if you want to add or establish a new entry if you have not already done so here, and keep that stop underneath. I mean, you can put it underneath the November low. It's not too different than the October low, but needs to hold above there for the count, this 1-2, to remain valid, and does open the door to the possibility that we get even a little bit higher here in that wave 5 of 5. Moving on to ELNA, another recommendation suggests we could see one more push down, hit that 618 retracement at 28.50, and then rebound from there. So far, price is cooperating with that. At this point, if interested, you can move your stop up if you took that trade from the prior November low up to the more recent low that was made at the end of last week, just underneath there, and even use the current pullback as another opportunity to add to the position, maintaining that same stop underneath last week's low. So really should be holding above there if we are indeed starting the wave 3 of 5. Next up, BRKB starting to approach our 382 to 618 retracement target support for this pullback as wave B. So it does have room to stretch a little bit lower, but if we do reach 220 down to 211, I view that as a decent spot to add to or establish long positions and you set a stop underneath the October low, or if you want a tighter stop below the 764 retracement, so underneath 206. But, I think that this pullback is going to prove itself as corrective, and we are going to turn back up in that C wave next. Moving on to some few stocks here that are actually performing well recently. First up is DraftKings. It is starting to poke above the prior high that was made in November, so that is really beginning to open the door with a little bit more confidence to the bullish red potential. The low that was made in November was wave 4, like kind of extremely skewed running flat wave 4. You can kind of see that here on the daily chart. I apologize. The colors are reversed in this case, but attempting to start that wave 5. And so this would be the one to start to what would likely be an ending diagonal wave 5. Which means that the initial subwaves here, if an ending diagonal, may not be as straightforward as an impulse or as easy to navigate. So you need to potentially give it a little bit more room with a stop placing underneath that December low if you're going to try to buy a breakout here. We'll see if it does make a sustained break. And usually I look for the 618 to 764 as the initial target for what will be wave A of 3. And could even wait for that A wave to fill out, pull back on wave B, and use that as the entry point as well. Next up on Pen, which has been performing, very well recently. It's something that we recommended both back at the beginning of November, and then we were getting that wave 2 pullback a little bit later in the month. So sitting on great entries, both of those two spots. The question is this going to be a standard impulse for the wave 5, or is it filling out as diagonal structure? If it's filling out as a diagonal structure, we're starting to approach the expected target fibs for wave 3 between 93.12 and 98.36. So if interested, that wouldn't be totally unreasonable as far as a spot to trim or begin trailing a stop on the position, with the expectation that you'll get a wave 4 pullback and perhaps an opportunity to add back to what you trimmed. The alternative interpretation is a little bit more aggressive, and that's a standard impulse, but this is a 1-2, and now working on wave 3, in which case that really opens the door to targeting beyond what our initial expectations were. And you could see price kind of come up into that same upper 90 region, but is what would be just wave 3 of 3. Get a smaller consolidation as wave 4 of 3, and then fill out a wave 5 of 3, and then get another 4 or 5 from there. So, just the point where if you are interested in taking a little bit off the table, as we start to approach that 93 to 98 region, that's where you might consider doing so. Moving on to Blue Apron, which is starting to pull back so far in 3 waves off of the high that was made at the end of November. The structure into that high does look like just 3 waves. So another situation where because the pullback off of that November high is starting to get a little bit deeper, a little bit larger than ideal for just a 4th wave, it looks like this might be the one to start to a larger leading diagonal to the upside, which actually works pretty well proportionally based on the larger fibs. So we've come down into a 382 retracement so far. I wouldn't be surprised if price wants to try for a little bit lower to the 50 or a 618 at 592 and 544 is the next support levels, but that does offer a decent spot for a long attempt, and setting a stop either underneath the 764, 786 retracement, which is at 482, or give it to full invalidation with a stop below the November low. Oops. Final chart that I wanted to take a look at today is Brown Forman. This is another wave setup that has been highlighted recently, and price did come down into the expected 382 to 618 retracement target support for the wave 2, and it actually looks pretty decent as a 3-wave pullback now complete. So hopefully some of you use that pullback as an opportunity to either add to or establish long positions. But even if not, and you're still looking to establish a position here, then it's not that far off of that recent low. Maybe you want to wait for the initial 5 up from there as what would be wave 1 of 3, and then buy the next 1, 2 start to that wave 3 of 3. That would also be a very reasonable approach, or even if you did add recently, use that as the next opportunity to add even more if you want to. But so far, turning up from where it should for that support, for that setup, looking good still. Really like the way that this chart has been cooperating recently. All right, that's all I had for you guys today. See you again next time.